Hey everyone, just wanted to do a quick video to remind everyone this time next week, on Friday, the end of March, we will no longer be accepting anybody into our Insiders membership, where we provide our weekly Finance Uncut Insiders report. I did mention this in previous videos earlier this year that we were going to be cutting any new members off, or we won't be accepting any new members come the end of March. And I can say 99%, I'm 99% sure that I will not open this up again. So if you are interested in Finance Uncut Insiders, getting our weekly report where I share my research and analysis on my own portfolio, the stocks that I'm invested in, stocks that I'm looking at, when I buy and sell stocks, drilling reports and updates from different companies, then send us an email to the email address on the screen below. It does cost $1 a day, so $365 US for an annual subscription to the Insiders members to get our weekly Finance Uncut Insiders report. But yeah, I am 99% sure that I will not be opening this up again to anybody else. I've got more than enough members to look after in this group. We also do some private videos that you guys don't get to see on YouTube. They're only available to our Insiders members. So if you want more information about the Insiders report, send us an email to the email address on the screen. And with that, what I'll do now is cut to a bit of a clip showing you what the Insiders report looks like. All right, so here we go. Finance Uncut Insiders. Here's the report. This is what it's going to look like. We go through our Austrian economic approach, and why it's so important and why we recommend you guys learn more about it. How we use a combination of Buffett and Greenblatt's fundamental value analysis, and why it works and why it's so good, and how we learnt from these gentlemen how to apply options to our portfolio. Then, as I just mentioned, we break our investment portfolio into 4 parts. And then coming to that now, I'm actually going to share with you guys some stocks that we own. So I'm going to give you a couple of free stocks. So if you don't subscribe to this newsletter service, well, I'm going to give you 2 stocks that we own. So the first one is Stanmore. So Stanmore is a coal stock. It's hard to go past Stanmore, who are acquiring Mitsu's 20% of the South Walker Creek and Poitrel coking coal mine in the Bowen Basin in Queensland, as well as other potential development projects subject to FIRB approval. That's Foreign Investment Review Board. Settlement is $380 million US, subject to adjustments. Stanmore recently purchased 80% of BHP's Mutsi, so they're taking it completely over, and have gained a further 10.5 million tonnes of coal production per annum from existing projects. If we go down a little bit more, so their saleable coal production, 2.8 million tonnes in the first half of 2022. That's up from 1.26 million tonnes in the second half of last year. So they've already doubled that in under a year. Higher realised prices and significant uplift in volumes following the SMC acquisition during the first half of 2022. Seen a record revenue and underlying EBITDA delivered in just the first half 2022 of $726 million. Operational performance led to operating cash flow of $563 million for the first half of 2022. Cash flow significantly improved liquidity, $546 million of cash as at June 30, 2022. So that gives basic earnings per share of 32.37 cents per share. Our buy price was 49 cents in August 2020. That equates to 1.5 times earnings, and we're expecting some pretty big dividend payouts based on our buy price. Now, you can see currently when I added this chart to the newsletter, which was the other day, its shares were trading at $2.21. We currently have that as a hold. We aren't accumulating this stock Now, we still think this stock has more upside based on a number of factors, based on their current earnings performance. But we will, before we start trimming our position on this and taking profits, we want to enjoy some of the big dividends coming our way. So the next stock that I'm going to share with you guys is one that I have recently been talking about. It's a drilling company. DDH1, DDH is the ticker code. It announced an on-market share buyback program on the 1st of July. The proposed number of shares to be acquired over a 12-month period is just over 34 million shares, or 8% of its current capital. Added 15 quality rigs to end of the year with 183 rigs. A further 11 are on order or under build, making it a top 5 largest drill companies globally, or in terms of fleet, the number of rigs. Annualized revenue per rig of 2.9 million, that is up 6.9%, and their outlook is for increased margin per rig, which is fantastic in an inflationary environment. 14% increase in full year 2022 financial year pro forma revenue to 506 million compared to 444 million, above average industry return on invested capital of 27%. Now that is huge, guys. Our rule of thumb is anything above 10% is good, and that's on our radar to look at. So 27%, outstanding. 10% increase in underlying EBITDA. Let me just scroll up a little bit. Underlying, where are we? Underlying EBITDA, 113.6 million compared to 103 million, 22.4% margin. 17.7 million returned to shareholders in dividends, with a dividend policy moving forward of 30 to 50% of operating net profit after tax and amortization, which currently, based on the 17.7 million, is 5.37 cents per share. Basic earnings per share, which is based on EBITDA, is 34.47. Our buy price was just in the last several weeks, so we started buying in July and August, was 64 cents, which equates to 1.86 times EBITDA, with an 8.39% dividend yield and growing. Now, when they made that announcement, the share price, you can see, absolutely shot up. So from 64 cents to 85 cents, and we still have this as a buy. So we're still buying this company even at 85 cents. And yeah, I actually wouldn't mind a pullback because this company is dirt cheap, in my opinion. Once again, not financial advice. You guys, go, if you want, go do your own research, run it past your own financial planner, financial advisor, etc., etc. But there's a couple of stocks there. So this is the kind of thing that I'll have in this newsletter, is all of our stocks, all the reports, all the analysis, why we buy a stock, why we sell a stock, and when we're going to sell, as well as all of our options trades. So how we sell options for passive income, like Buffett and Greenblatt do, for compound. So we do own some big stocks, even though our focus is on small cap. We do own large stocks that we simply sell covered calls. We receive about 2% a month, so about 24% a year on average. And, they usually pay a 5-6% dividend yield as well. So we're getting about 30% a year just in income. And what do? We just reinvest it. We don't use that income to live off. We just reinvest it. So compounding it at such a high rate. They're boring, the big stocks, but that's why we use it, is simply for the options trade there. So as we continue going down, building an international portfolio. So we talk about the different markets and sectors that we're in and interested in. Outlook, some of our stocks that we've owned and why we've bought particular sectors, why we like small value and resource stocks over other sectors. You guys will love this one, why we buy junior explorers in 2 particular market cap quartiles, and that it really says it right there. And then the life cycle of a junior explorer, and why we invest in particular parts. There's times to invest and there's times not to be investing in this sector. And then once again, guys, important disclaimers, not financial advice. We do not accept any liability. This is not a recommendation to buy or to do anything. It's just for entertainment and education purposes only. So if you are interested in our Insiders membership and getting our weekly report and private videos, or you just want more information, once again, send us an email to the email address on the screen below and we'll get back to you. Anyway, guys, take care, and I'll see you all again on another episode of Finance Uncut. And just a reminder, the information provided in this video is for education and entertainment purposes only. Nothing on this channel constitutes as financial advice. The information in this presentation is no substitute for financial advice, and all investors should seek advice from a licensed financial advisor having regard to your own objectives, financial situation, and needs.